Hello, my name is David Glascott and I'm Head of Retail Distribution for Prime Value, and welcome to this Financial Year 16 update of the Prime Value HID Opportunities Fund. Joining me today will be ST Wong, Portfolio Manager for the Fund and Chief Investment Officer for Prime Value. ST, if you could give us a brief recap on the investment objectives for the Opportunities Fund.
David, the Prime Value Opportunities Fund, or PVOF as we call it, is an absolute return fund focused on delivering positive returns for our shareholders or investors over the cycle. The objective of the fund is to deliver 8% per annum over the cycle for investors. To achieve this objective, we look to invest in 20 to 30 stocks, essentially a concentrated portfolio, with the ability to hold all our funds in cash should the environment warrant that situation. Now, part of our process is to construct a robust portfolio across 5 pillars: core companies, companies with specific growth drivers, turnaround companies, as well as companies in thematic trends. Finally, as part of our investment process, we also invest in companies which the market might be short-term in focus, which gives us the opportunity to invest in companies which are undervalued for long-term relative to the fundamentals.
So, ST, for the financial year 2016, how has the Australian stock market performed?
The ASX 300 Accumulation Index was roughly break-even for financial year 16, just up by 0.9% for the financial year. It has been a volatile year for the market in general, shaped by global events, including a slowdown in Chinese economic growth, the Fed in the US raising interest rates in late 2015, and of course Brexit towards the end of the financial year. All this meant that investor confidence was quite volatile through 2016. However, a number of commodities where the price is concerned have shown signs of bottoming, including iron ore and oil prices, and that was really positive for resources stocks.
Against that backdrop, how did the Opportunities Fund perform in 2016 financial year?
Fund returns have been strong. The fund returned 14.9 in FY16, and since starting the fund about 4 years back, it has returned about 15% per annum since 2012. What's pleasing with the fund return has been its consistency. We've consistently beaten our objective of 8% return per annum, and this has been achieved with low volatility and low turnover as well.
They're certainly impressive numbers, ST. What were factors contributing to that strong performance during the year?
In the past year, we've benefited from a number of broad themes. For example, internet consumption has been insatiable. Our holdings in TPG and Vocus have been key beneficiaries of that theme. Secondly, our investments in retirement home provider Avio and healthcare provider hospital operator Ramsay have also been doing really well on the back of demand for their services and products rising as Australia's demographic cohort change. Finally, Asian wealth that's been growing. Sydney airports have been a beneficiary of the significant inbound visitors to Australia as Asian wealth increase. We did participate in a number of good IPOs. Baby Bunting, for example, the largest provider of baby goods in Australia. Also Plumbing Supply, Reliance Worldwide, that has been great for the fund performance in the last 12 months. More importantly, David, we avoided a number of IPOs which had performed poorly. Part of our process is to identify companies which lack the track record or management strength to carry the company through. As a result, the fund performance has been robust and has been consistent.
As we know, ST, capital preservation for investors is important. How has the fund performed in this aspect over the past 12 months, or even in fact since inception?
The fund has consistently outperformed the market during periods of weakness. Since inception, when the market has had a negative month, the fund has outperformed the market 94% of the time. We believe this is important. Avoiding large capital losses makes for a significant contribution for long-term growth in a portfolio.
So finally, ST, what is your outlook for the financial year 2017 and how is the fund positioned to capture any upside?
We've always managed portfolios actively, which means building stocks, one position at a time. We are quite excited about our pipeline of ideas. It's across the board by market capitalization and by industries. So there is diversity in the portfolio and in the pipeline of ideas that we have. In that sense, we are quite excited looking into 2017. We look to invest in high quality companies which are able to grow at earnings, of course at a decent price level. We expect to be opportunistic going forward in 2017. We expect the market to be volatile and therefore throw up opportunities for our fund as we invest into these high quality companies that we have identified. For this reason, the ability to hold cash is important flexibility to have. It gives us the opportunity to invest into volatile markets and to take up opportunities as we see them.
Thank you, ST, for that informative update on the HID Opportunities Fund, and thank you for listening.